All right. Welcome to Charts and Coffee. Let me bullet you now. Hey, gang. Welcome to Charts and Coffee. That's my mom making a cameo appearance. We have, if you hear some banging in the background, we've got some demo work going on, hence the reinforcements. Hopefully, most of that won't be making it through. I'll be with you all in the options room this morning, right after Charts and Coffee. So hopefully this relative silence will continue, but we'll see what happens. So as always, great to see you all. Happy Monday. Hopefully everyone's caffeinating and dominating. I'm going to talk a little bit about what we inherited from the open. So I'm going to talk a little bit about what we're seeing on the intraday, because there's a lot of folks saying, I got a couple emails saying, Rog, we were short some financials, we've got short bonds, things like that. But I feel that with where we are right now, the breakdown candle on Thursday, the follow through candle on Friday, then we get this Sunday 6 p.m. open. What do you do with that if you're not already short? And, there's always a hesitation to want to short into a gap down. And of course, there's a limitation for traders who are waiting for the SPY or the QQQs or equities to open. Sunday, Forex is open, futures are trading. So those of you that are familiar with just stair-stepping with the price movement range, this is actually a darn near, I was just chatting with Lorna Bot. This is pretty much darn near perfect volatility, just stair-stepping lower as we see we have a double red underlying market trend. Even when we go neutral to very nice overbought signals, and then we're right back to inheriting that double red. So as we prepare for the morning, look, this is not a news flash. We're inheriting very much a double red morning. This is the next question I know, because it happens, in my mind too, is there a buy potentially happening on the intraday? Is there a buy potentially happening here? Well, no, unless you want to set up, and I'm just kind of presuming some of the, and we'll talk more about this when I see you all in the open. So the thing to remember here is when you have a 5-minute high-low range, think about marking that high-low range, and really the only fade that I would even consider would be a gap fade on that high-low range. One thing that we are getting, notice the Darvis see that purple line there? I did not draw that. The process drew it. That is a Darvis box right there, and you can see the two signals. Doesn't mean that's an automatic buy by any stretch, but if we're going to see a level defended, it's probably going to be somewhere on 11.5. Do not presume support, gang. Do not presume support. What you want to look at is intraday. So this is going to be where it makes a lot of sense to have, remember pole position, high gear, low gear? You need to have 2 gears. And so if we've got these 2 gears to be working with, what we have ultimately is a situation where with the 2 gears, right, I can look at the 5-minute or I can look at the daily. But I don't want to impose something that I want to do on the 5-minute on the daily, and I don't want to impose something I want to do on the 5-minute. That's a really easy mistake to fix. Stick with the time frame, build the setup on that time frame, set the targets on that time frame, and the risk is determined by the volatility of that time frame. So the morning might be really great for some day trades. Later on, we'll start looking at what, if anything, we can do by way of the daily time frames and the swings. Now, everything is not in a downtrend, gang. There are going to be pullbacks, perhaps with the amount of weakness we're seeing. There are going to be some pullbacks on some gorgeous uptrends. And this is the likes of XOP and OIH. I'm just throwing a little extra before we get to the questions, gang, because I know there's going to be a lot of concern. I know there's going to be a lot of confusion and potentially frustration from the standpoint of and this is really important from the standpoint of juxtaposing longer term time frame considerations, looking at your investments and so forth, your portfolio, and looking at your trading. It's so easy to look at your portfolios and get really down on trading, but remember, they're two different things. So just like we want to separate 5 minutes and dailies, we need to separate our portfolios from our trades. It's too easy to let that dark cloud start to affect our trades, when in fact they're two different time frames. Frankly, they're two different time horizons, and those are things to keep in mind. All right, so with all that being said, let's go ahead and jump into the questions, gang. And I've got to make a note to myself here. Bear with me here. All right. So here's what we want to remember. Again, separate your day trading from your daily time frame swing trades. And please, this is not the time to look at your investment portfolio day after day. This is the time to think about wish list numbers. What if 6-8 months ago you're thinking, oh, but only to get Amazon at a certain price, but only to get Microsoft or Apple at a certain price. That's where we want to be opportunistic with that longer term time horizon. I hope that brings a little balance to the force. And let's go ahead and tackle our questions here. How much of nat gas and gasoline futures pullback is dollar strength related, in my view? And if the dollar continues to strengthen at this pace, will that drive energy prices down? RF, dollar and natty, dollar and crude, dollar and RBOB are really just completely disconnected. Correlations are not really ever 100% in terms of their, this market goes up, this market goes down. If they're negatively correlated and if they're positively correlated, again, there's no correlation that's 100%. And every correlation ebbs and flows. Sometimes they'll be a little higher and sometimes they'll be a little lower. That's one of the misnomers about correlations that a lot of traders don't know, which is that they're not fixed and they're not complete, right? They're going to vary, and there may be a percentage. So right now, the dollar and energies have completely disconnected. Dollars in an uptrend, energies are an uptrend. Can they continue? Absolutely. Because correlation is not causation, right? The idea that right now natty gas can't move higher has nothing to do with dollar strength. So that might be clearly an influence, as with seasonals, by the way. Natty gas is out of its seasonal uptrend. But again, there's so many different factors that will move price. And right now, the dollar or even the seasonals are just not part of the conversation. So right now, they've disconnected, and that's fine. We'll move forward with the validity of each of their uptrends being valid for their own narratives, not necessarily meshing together and creating a mess. I think right now there's a lot of clarity in staying long dollar. There's a lot of clarity in staying long energy and energy stocks on those pullbacks. So thanks. Very, very good question. Thank you. Tim, good morning. On my weekly Sector Secrets notes, what are the signs that you show XLF is on the bullish radar? Did I put XLF on the bullish radar? If I did, I'm going to fix that. XLF. Oh, yeah, no. XLF is not. XLE. Fat finger. We'll fix that. XLE, OIH, XOP, FCG, UUP. Those are the bullish radar. And so let's talk about XLF, though. Let's talk about XLF. You know that some of our most recent trades in XLF have not been at the XLF or tied level. They've been at the individual boat level. So when we take a look at XLF, we've got double red, right? So this is absolutely short the rip. And so we want to continue to look for opportunities to the short side here. So now that was just a fat finger, probably doubling up on XLE and just a typo. No interest in long on XLF. Thank you for the question. Look at all that double red. I'm sure you thought, oh, great, Rod's been abducted by aliens. Double red. There's no way we want to buy here. And you're absolutely right. Can we take a look at the Russell? Absolutely. So anytime we want to take a look at the Russell, we want to start with the RTY, use the futures touchstone. This has been going back and forth between chop and a downtrend. Again, whenever a market is in chop, look at the previous trend. And by the way, this has been an idea. This has been a narrative that I've been really focused on for weeks. And if you've been catching the free videos, and if you've been catching the macro market deep dives and any of the sessions that I'm doing in the room, you know I've been saying, look, we want to stay short bonds because yields are moving higher. We want to stay short the equity markets because the trend that preceded the chop was down. This is Charles Dow 101. Give the trend that came before the chop benefit of doubt, right? That's Charles Dow's, 1900s, late 1800s. This is over 140-year-old theory. What we want to remember is that within the context of a downtrend, we want to continue to short the rips. But when it transitions to chop, we want to focus on overbought shorts. And so when it comes to the Russell, same thing. Enduro Mom, same thing. Focus on the downside right now because of where it is. I can't do anything with the Russell at this level on the daily because I'm not coming off a ceiling. Heck, I'm not even breaking down through support if I wanted to do anything that aggro. What I can do is say, all right, what time frame is presenting opportunity, and focus on shorter term moves on a shorter term time frame until another daily reorganizes. So that is the high-low gear. That's my pole position type mindset. Does anyone remember that game? I loved that game as a kid. I thought that was just the best of technology at the time. So that is the way I'll look at that. Be comfortable saying to yourself, all right, the daily that train left the station, but the 5-minute chart, there could be opportunity organizing there. All right, David, good morning. Quite a few winners. Yeah, David, I'll tell you what, it was a tough end of May. It was a tough end of April, but luckily, that's 1/3 of the overall month. Friday was great. Yes. While the Lorna bot was out, it was just pretty much us talking about, hey, let's take out these T1s and let's start talking about T2s. Do I want to start thinking about a trailing stop for our IEF short in the Mastery? Here's the thing, David, and you'll notice, and this is for everybody, T1s, I'm very prudent. I don't want to ever put a T1 out in the stratosphere or, deep part of the ocean. I want to look at where we've been before and pay myself while I can, not when I have to, right? That's the prudent T1. T2, this is where we want to talk about shifting into another mode. Now we shift into greedy mode. Once we've got that break even, trailings make sense, but having a much more ambitious T2. Look, we're trend traders. Everything about what I do is I don't know what's going to organize into a trend. I don't know what retracement I'll be able to hang on to. However, once we've been able to get past those two issues of, is this trend going to continue past higher highs or lower lows? And was I able to hang on through the retracement? Now, this is where we really just want to sort of stay out of the way and let either the helium of the move higher or the gravity of the move lower really work for us. Because in the case of trend trading, especially when we get stopped out, the way that we continue to make forward progress in our accounts after taking in sometimes end of April, end of May, we took some paper cuts. This is not news to anybody. But when we have trends that were working before then, we have trends that are working now, this is how we overcome those drawdowns in our account and start to build. So you're going to see I'm very patient, maybe sometimes arguably too patient with T2s, but this is how we trend follow, right? This is the way that I look at it. Okay, so moving on. You want to meet my mom? My mom comes into, gosh, she's my mom, right? So forget life, everything raising me. And my mom raised my sister and I. My father passed when I was 15 and my mom was 40 years old. And it wasn't until I was 40 I really realized how young that is. And so she at 40 raised my sister and I, 13 and 15, and just didn't know how she was going to manage after we graduated college, knew she wanted to send us to college. And my mom turned to the markets. She wanted to be home. Luckily what my dad was able to establish before he left could give her some time to think about what she wanted to do. And then she turned to the market. She started educating herself. She didn't have, this was 1986 that she was doing this. So she read the newspaper and she'd read books and she'd go to seminars. Back then we used to actually go to seminars, and she educated herself. And really, when I would look back, when I got older and I started doing more trading myself and investing, really starting off with investing, I started looking at the timing of her purchases. And I don't think she actually knew how much of a market timer she was. She saw patterns. She's raised kids, for crying out loud. She sees patterns a mile away, right? And I think she just applied that kind of common sense to that. And so when I said I wanted to try my hand at the market, she was more than supportive, because she knew what it had done for her. Yeah. So yeah, Tim, definitely inspired, allowed. At some point I came back to my mom and said, look, I'm not going to law school. I know that's what you want. I have an Indian mother, right? Lawyer, engineer, doctor. Anyone out there raised by Indian parents, you know what I mean? And lots of other, right? It's not just an Indian thing, but my not continuing on with my education after my 4-year degree, that was, oh my gosh, I had to show her, hey, give me a shot at this. I think I can do really well. So yeah, definitely. We're very passionate about the market in this house. We're very passionate about what it can do for individuals. And that's why I will always root for retail traders and retail investors. I am not in awe and fascinated by hedgies. I could care less about them. I really root for and do everything I can to help retail traders. And that's a big deal to me, because I know how much it helped my mom and obviously my sister and I. All right. So next question. Futures are down and volume is very low as well. Well, Nick, at this stage in the morning, looking at volume, it's not surprising to see time-based volume a little low at this hour of the day, because we don't have full participation yet. It's a very small segment of the trading population that's had sufficient amounts of coffee, has a plan, and will be engaging the market at 18 after 9 a.m. Eastern, right? After 9:30, that's when that tsunami of volume and interest and attention is going to make its way in. So I don't mind about the low volume, because that's pretty much par for the course for the Asian session, which I was trading some, and for the pre-market, as well. Any advice on long-term positions in this current environment? Eric, we have our quarterly portfolio conversation coming up this week. And what I really try to emphasize is embracing the weekly time frame, understanding support resistance trends on the weekly time frame, and understanding sector rotation, understanding the way in which the overall, right, looking at the way in which the overall market seems to be flowing. And right now, we do not have any rotation. We really don't, because rotation would actually be noted by the hottest sectors starting to roll over, take profit, while the dumpster fires of the market are kicking higher. And what we have is broad-based risk appetite, broad-based risk aversion. We're not even seeing flow into the XLPs and XLUs quite yet anyway. So we're going to be pretty patient. I'm not seeing a lot of opportunity yet. I think it's a little too soon, but it's never too soon to start building the wish list, right? We should have wish lists for stocks that we want to buy at certain prices. And if someone would have told you, let's say Apple, right? Let's grab something that has not split. Let's say Apple at 181. I've got zero interest in Apple at 170 or 181 as an investor. But when I start looking at the weekly and I start stretching that time horizon out to 6 months minimum, the last time I bought Apple, the very last time I bought Apple was back in here. That was the last time I did it. So you can see it's been over a year. And I think that longer term portfolio management requires that level of patience and that level of opportunistic, hey, this is now the price I want, right? So it's not even the price, forget the price, it's the movement that we're looking for. Whether it be Apple, whether it be, something like, I love having Altria. Love having things like MO in my portfolio. So again, it's finding those wish lists on dividends, aristocrats, things like that. So a little bit different in approach, but I think the best investors have patience and a little bit of soul of a trader when it comes to understanding some of the nuances of price action and technicals and timing. I think we can bring that part of our skill set along, but then we got to say, look, now we're looking at longer term time frames with a longer time horizon, but it does work. It does work. And I think that you bring a little bit of that trading skill, but you add a heap full of patience, and you're in a good spot. So gang, just like that, our time is up. As always, have a wonderful Monday. I know it's challenging. Separate out the different parts of your trading life. If you're a day trader today, 5 minutes. Don't worry about your longer term portfolio. Now's not the time to look at that. Remember, those portfolios are 3, 5, 7-year time horizons. So don't distract your mind with that. Focus on what's at hand. Some daily time frames, keep an eye on the oil, and some short term, right? And be patient. This might be a great time to be patient. And remember, as Trish here in the office, many of you know the Trish boss. She reminds me, Ron, don't you always tell me cash is a position, flat is a position? And that's okay too. It really is. It's okay to play defense right now. All right, gang, be good to each other. I'll see you tomorrow.